Okay, welcome back for your business news. Now we're over to Mike Eppel with something we knew was coming, and that is interest rate hike. Another one. Mike, good morning to you.
Yeah, good morning. Borrowing costs will be going up today, Melanie, by 50 basis points, 0.5%. The Bank of Canada has already raised rates twice this year. They're likely going to raise rates again coming up in the middle of July. So this is this cycle that we're into now where it's costing more to borrow money. We were in that remarkably low interest rate borrowing time during the pandemic, and some would say for too long.
Yeah,
that they kept interest rates at lower levels, thinking that inflation was transitory. Remember, that was the buzzword. And then, of course, there were the spillover effects of supply chains and war in Ukraine and everything else that kind of tipped the balance the other direction. And now we've just had skyrocketing prices. So central banks are seen right now as being behind the curve, to use a technical terminology, where they have to raise interest rates maybe more aggressively now to kind of catch up to where inflation is and try to balance things out a bit. But you have to wonder, I mean,
Oh, no, Mike Eppel's connection has been lost. He is frozen right now. Oh, you're back. Sorry, you were frozen for a little bit, Mike. We just missed a little bit. You paused ever so slightly and said, you got to make you wonder, and then paused, and you were frozen.
Well, that was totally planned then.
Yes.
Of course. Look, central banks, you know, they raise and maneuver interest rates. It always seems to, it's kind of like the price for gas. You know, it goes up real quick and then filters back really slowly. When they cut interest rates, you see more of a quick response from consumers as opposed to the inverse. So, yeah, if you've got a home equity line of credit, that's going to be more expensive tomorrow. Variable rate mortgage is going to have a higher interest rate as of tomorrow. Fixed rates, those are more based on the bond market, and those have already gone up. And what have we already seen? 2 interest rate hikes in the housing market starting to cool. So, you know, it's going to be a very interesting second half of the year. We're already into the month of June, so we can start talking about that a little bit for forecasts going forward.
Mike, let's talk about 3 M's. A mixed May on the markets. There you go.
Yeah, it started out really badly, to say the least. Markets were just selling off and hitting multi-month and multi-year lows in the first half of May, and then kind of recuperated. In fact, the Toronto stock market and the Dow, they were all up for the month of May. Had been on a winning streak up until yesterday. But what's been the driving factor? Energy prices. The energy sector so far this year, cumulatively, is up more than 50%. Looking at companies like Suncor and Canadian Natural Resources and all of these other Canadian heavyweights way up for the year because the price for oil has gone up. Bank stocks have been okay of late. Overall, though, the markets are still down for the year to date. So as we kick off the month of June, it'll be interesting to see what comes next, because boy, oh boy, it changes on a dime, it seems like.
Yeah.
One minute you think it's heading down, and then next thing it's going up.
Absolutely. All right, let's get to the movie theaters, shall we? A lot of people flocking back there, checking out the biggest hits, like Top Gun, which was a massive opening weekend.
$156 million in box office.
But will there be all the snacks? Because for me, I like going to the movies, half of it to watch the movie, half of it to watch the snacks.
Now, I want to preface this story by saying this is in the Wall Street Journal, and it's U.S. based right now, Melanie.
Okay,
but
for now.
And so for now, but there's talk of everything else being in supply crunches, so to speak. Popcorn. Yeah, that could be the next supply chain issue, because farmers, they grow specialty crops for popcorn specifically. And it's been, because of what's gone on in the commodity markets, a little bit more lucrative to plant soybeans instead of popcorn, for example. Popcorn also requires, that variety requires more fertilizer, so more input costs. So some of the U.S. movie theater operators are going, we're going to see a popcorn shortage maybe this year. They're also having issues related to the plastic liner for the popcorn bag. Some of the other, like cups, for example. Drink cups, those are in short supply, and they're looking at third parties to bring that in. So it's something to watch. It's in the States right now, don't panic. But of all the things that the movie theater companies do not need right now is a popcorn shortage.
You know, I love me some of that buttery popcorn. That stuff is delicious. All right, Mike.
Messy as all get out. But that's what makes it good.
Yeah, that's exactly what makes it delicious. Okay, talk to you soon.